In the markets, we had a solid update today. No news going on in the U.S. Very little coming out of Greece. So usually means a positive day. And any normal indication when I'm usually looking at when there's no news coming out and when Congress isn't writing new laws or in the midst of a crisis of some sort, no massive geopolitical fights. In my opinion, unless we're in an obvious corrective phase, like down over here, then the market's probably going to move up or sideways throughout the day, and that's what happened today. No big news out of Greece. There was a big meeting between a bunch of countries about what to do. Some reports had leaked that there might be a 6-month extension. Some reports denied that. Saw a poll out today that said 3/4 of the Greeks don't want to leave the Eurozone, but they also don't want the austerity measures that the Eurozone is imposing on them, which is interesting when you want to have your cake and eat it too. When you want to borrow all the money to bail out your citizens, but then vote for somebody in power who is going to argue that you shouldn't have to pay that money back. Anyone who reads between the lines, it shouldn't be terribly obvious why Greece is in trouble. It's because they're very, very, very generous in government agencies and giving handouts to their people. When the average retirement age of a public servant in Greece is 53, whereby you work for 35 years and then you retire at 80% salary with full benefits for another 30 plus years, the numbers just don't add up, and you can't spend that much and be that generous for your public servants, as well as be very lax on collecting taxes to the Greek people, relying solely on tourism as your main source of income. It's 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 not terribly hard to understand why Germany is very upset that their people have to pay for the Greeks to not work later in life a lot more than, say, the Germans do when Germany insists on no retirement age before 65 or 70, and when Greece riots when austerity makes them have a retirement age of 63 instead of 61. The numbers just don't all add up, and Greece is in trouble. There's no easy way out for them. They're trying to get an easy way out. They're basically trying to borrow from everybody else, get out from, and then pull up the rug from under the table, and keep the glasses and silver levitating. I've said before that it'd be the best thing for both parties to separate, because everyone in the Eurozone is in essence holding Greece up. I know there's some geopolitical circumstances as to why the Eurozone may not want Greece to leave, because if Greece leaves and they're financially in trouble, an emerging market like Russia or China could come in, and now that increases the East's role in the West a whole lot more than just, say, Ukraine, for instance. Now they're an Eastern country might have a strong foothold in Greece. So the Eurozone and all the countries in Europe are taking a loss to keep Greece in the Eurozone. It's basically like handing a credit card to all your 10 of your children. 9 of them are responsible, and then the 10th is Greece, who keeps running up his credit card, and then somebody just keeps handing him the credit card over and over and over and over and over again and saying you don't have to pay. This whole thing will get sorted out within the next couple of weeks, and we'll see what happens from there. My prediction is that Greece does not leave the Eurozone, because both parties will be hurt in the short term, and politicians usually don't like to go through the short-term pain based on past history of nearly every government that's ever existed. And therefore, I don't think the exit is going to happen, especially if the Greek people, 3/4 of them, don't want to leave the Eurozone. And now for the trades of the day. And before we get to the Netflix trade, here are the other honorable mentions that I had potentially looked at. We had one on Google, where we saw the consolidation happening here and the break above that yesterday, and I wasn't really confident in this one, and so today didn't really do much. Didn't think it was going to. So glad I didn't pick that one. Another one we were looking at was Apple, and here's today. You can see that we did have a trade placed on here, but it didn't go low enough today in order to satisfy that criteria, because what we had originally looked at was this move up right here and a retracement of 50%. See, that's well exceeded its 100% target right there. In fact, it opened pretty much right at it. So this one was a no trade, and it's really getting to the point where Apple is the strongest, is by far the strongest stock in the bunch over the last few months, especially over this year per se, in terms of non-commodity based equities. Because gold stocks had one of the biggest rallies in January that it's seen in years. So that's why I say something other than that, because that sector far outperformed everybody else up until recently. But it's getting to the point where if I don't find something during the middle of the day, half of me is just going to go in and buy calls on Apple at the very beginning and say I'm bullish on Apple, because it's probably going to happen more often than not, as Apple has issued a few, I think the number was 20 billion in new debt, so it can buy back more shares, therefore making the shares outstanding more valuable without actually having to perform on technicals and fundamentals, and therefore that has spurred a large buying spree for quite a while, plus the massive outperformance on earnings right there. Therefore, I'm always going to look with a grain of salt in Apple as one that's going to continue to climb until otherwise noted. However, that still doesn't mean that we can't go bearish at some points, because one of the previous videos we did have a bearish trade. I believe it was right here, where we called the bearish trade and we placed the trade and we made a decent profit right there. So it's not entirely inconceivable for you to go bearish on a stock like this when you see the right technical pattern. Don't just say, because I know a ton of people that do this, and it just baffles my mind when they say, okay, well, we've had 2 or 3 up days right here, so it's gonna have to go down tomorrow. Yeah, bull. Because look at all these days right here. Up, 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 and then massive up before crashing back down, and then up, and then down, and then up, then down, then up. You can't predict when something like that's gonna end, but usually how I trade stuff like that is I draw a nice little support channel right here, and the thing is just gonna go up and down while it's on that support channel, like so. Support channel, we're gonna go up, then down, then up, then down, then up, then down, then up, and then crash, and then bam, and then most likely up and down, and up and down, and up and down. Something like that. So on this particular time, right there, hold on this particular time, right here, that's not a bad time for you to go bearish, which we pointed out and actually made a profitable trade going bearish. And keep a close eye on that, and just go bullish until the cross, and then go bearish to make back what you lost on the day. But I'll explain more on that on a future trade. Another honorable mention we had yesterday was Amazon. And when we're looking at this guy right here, we saw Bit of a consolidation right there. And I pulled up that 5-minute chart yesterday. We also have a, you can't hardly see it on this view, but if you expand this, you'll see that 2 days ago the high was bigger than yesterday. So therefore, we have a min-max right here as well. So consolidation, min-max, and therefore I was expecting a bigger day. And here's what actually ended up happening. And so the way I traded this is I put here's yesterday's high, here's yesterday's low. Whichever one it crosses is that direction I'm going to go. And as we open today, it almost gets it right here. Back up a little bit. Almost gets it right there. Not quite. I'm looking at 377.5 calls at the moment. Right there. I'm looking at the price of them, and they're $2 at the peak right here, but it didn't quite cross. Didn't quite get filled. See right here, we're in a consolidation. We can easily draw this right there and right there so far. Breaks above. As soon as it breaks above, our target is going to be 375. More than likely this 375.58. Hits both, but more importantly, I'm in right here for $1.88. And because I know this should be a big day, I'm gonna wait it out. So even though it crosses below, right there, I'm not worried. It jumps back up. Let's throw this back on. So now our target is no longer this. We can throw that over there for the moment. Now I'm looking at this right here. Right there. Alright, I redrew these a little bit. And you can see our target is going to be right here at 377. Nice round number. And what I'm looking at right here, it's almost getting there. It's almost getting there. And it's kind of stuttering around here. And for me, I'm not entirely convinced at this point it's really doing what I want. So at this point, I'm going to draw a resistance channel right here, right there, and say whenever it crosses there, that's when I'm going to get out. Because even if it misses, it's the higher risk, because doesn't have the upward energy that I'm looking for, is not good. And as soon as it crosses right here, I'm out for 280. Now in theory it's supposed to get to 377, and it does end up getting there right there. And that also happens to be the high for the day. And I'm looking at the price right here at 377, and it was $3. So I missed out on 20 cents. But you're probably thinking, why are you telling me it's not going in, doesn't have the right energy to go up? And the reason I'm saying that is because usually on these days, when there's a breakout, this thing starts shooting up at a point a minute or a point every 2 minutes, and it just keeps on going like that. Because when you have that much consolidation, people aren't sure, and the computers that the big institutions trade with aren't sure which direction it's going to go. So it has triggers on where, and once it hits certain points, it starts breaking out. And it just didn't do it the way I thought it would do. And Amazon has had big days in the past. The daily chart for a minute, you can see right there's a big day, there's a big day. These are the kind of days that I'm expecting. Like right here, right here, right here. It's not really doing that. And I just don't have the faith. And even though I could have very easily given some back, at this point, I'm just going to take the money and run and do with it what I want. And so the thing continues to go back sideways and sideways throughout the rest of the day. And we throw that together, you're getting a 49% profit. Had I gotten out on my target, would have been a 60% profit. instead of a 49, but I'm going to take my money and put it to better use. And now for the trade of the day that we said yesterday that we were going to make no matter what. Was on Netflix, and this is the second day in a row we entered on Netflix, and it's the second day in a row we went bullish on Netflix. First day was because it crossed that resistance channel right here and did exactly what we wanted. Today was a bit more of a complexity problem when we saw this irregular flat right here when we had 1, 2, and 3 right here, and because the B wave, the second wave of this right here was longer than the previous one and the following one, that meant there was enough upward energy that this B wave, the top of this wave right here, had to be crossed by the next mono wave, which yesterday's trade confirmed we were in. So at some point before it crosses below 2 days ago's low of 438, it had to touch at least right here. And that was our plan for the day, and here is what happened. Here's the daily chart of Netflix for today, and right where we opened, excuse me, we opened nearly where we closed yesterday, and at this point it's not moving a whole lot in the first minute. I get in right here with a 457.5 call for $3.20. And I said our stop was going to be 5 points below where we got in, so our stop is going to be where did it open? 453.28. Our stop was now 448.28. Right there. That is our stop. Anything below that, we are out. And almost immediately it starts going our direction. Right there. When this happens, don't freak out. Just hold on. And what I'm looking at when I'm seeing this breakout right here is what I'm looking for is a little bit of a stoppage or a consolidation of some sort. And this is the type of breakout that I was looking for when I was trading Amazon. And when this did not happen, I took the money, took what I could, and got out. In this case, it's doing what I want, which is exactly what we thought it would do yesterday. And so we're going to hold on and see what we can get out of this. Now already 6 minutes in, it's already crossed where it's supposed to be from a technical point of view. And at this point, I'm not necessarily getting out. If this was a Friday, I probably would have gotten out by now, just because the rate of increase of the price of the option goes much higher for every dollar earned on the stock. So your profit's going to be a lot bigger in a lot shorter time. And on Friday at this point, I probably would have gotten out. But it's still Wednesday, so we do have some time, if you're an option trader, to just hold on. If you're a stock trader, nothing to worry about here. And so what I'm looking at right now is something like this. What I'm looking for is, here's our open. We went sideways for about a minute, and then we went up. And then you can see at 9:34 and 9:35 we did one of these. And then what I'm looking for now is for it to go up again and then stop again. And then after this happens, it's going to come down almost always. And when this happens, it's not time for you to sell necessarily. If it starts going down like this and it goes really, really steep, like so, that's the time when you should start to get worried. Because normally what's going to happen after you have a move up, a consolidation, another move up, a consolidation, and then a cross from our, let me redraw that here, of our so-called support channel right there, and it drops awfully steep. What you look to do is when it starts going down like this, you're going to look for a retracement right here, a very slow retracement, like so. And after this particular mono wave gets out, that's when you get out. Right here. Right there. But that scenario is only if this wave, let me draw that in red to get your attention, this particular wave right here is very, very steep. As steep or steeper than this one and this one. If that happens, look to get out. However, let's go back to right here, because that's what we're looking for so far in this minute trade. Back to the minute chart, go a couple more minutes, and now we have the second consolidation right here, because the first one was right here. Alright, the second one was right there. And now this is what we're looking for. We're looking for a move down. The move down is going to happen, period. If it doesn't, then the scenario is one that I very, very rarely see. But you can see right here, consolidation, and then a breakdown. Now, we said earlier that when the breakdown happens, this is a fast breakdown. All right, this is a point a minute. That's pretty darn steep, even though on the way up it was about, you can see this massive move right here was 2.5 points at 9:32, and then again right here 2 points at 9:36. But a point a minute is very fast, and what we're looking for is a move back up. There's going to be a retracement when you have this kind of a move. And here comes the retracement right here. It's a bit of a consolidation. So what are we looking for? We're looking for a big cross down back below, and if that happens, that's when we get out. But that did not happen right there. So now what? Let me go back before that happens. Kind of just gave away the icing on the cake before I baked it at 350 for 2 hours. I've never baked a cake before, but back to the trade. So here we are, right here, and now we moved down. Right here, very steep, and we're moving back up. Not as quickly, and we're trying to go down, but then you can see what happens right there. So what happens at this point? Well, you're going to have a zigzag. And when that big move happens right there, the first thing I look for is where's the target. And I draw my zigzag after the retracement. It didn't quite reach the 50, so when you have this 38.2 extension, your target is 61.8. So technically it's already hit our target. So and in this case, it wouldn't be an awful opportunity to get out if the thing starts moving away and starts going down. And not only that, once this happens, you can see the 460 computer resistance that we looked at yesterday has now been crossed. So at this point, what I did is I looked back to the daily chart and said, where could this possibly stop? And here's our daily chart again, and we had a bottom right here 2 days ago, a massive move up yesterday, and now we're having a massive move up today. And so far in the middle of the day, we're at 461 right here. And the way I'm thinking is that let's go until the length of this wave has been crossed. So that even though this thing retraced far below, if we were to extend the length of this wave, this right here to that right there, that's a low to a high of about 24 points. And therefore, even though I didn't say this yesterday, this is what I'm thinking, because I wasn't expecting this big of a move so far. And you don't freak out and say, oh my God, what do I do? Just calm down, take a deep breath, and think about it logically. And the way I'm thinking about it is that I'm thinking that this next wave is going to be about the same length of the wave that happened from the 2nd of February and the 3rd of February right here. And that would put us 438.5 plus 24 points is about 462.5 to 463. So what I'm going to do is I'm going to draw this right here, put it in big fat green, or I'm going to say big fat red to stop right there. That is our stop. No matter what, we're getting out right here. And once it hits that point, what I look for is the end of the next mono wave before I get out. And so back to our trade right here, 462.5 is our stop right here. And so what happens next? We get a small move up, a small move down, a consolidation. Now this might freak some of you guys out, and what I also drew right here was that line right there. That would not have been a bad place to get out right here, but I stayed in because I'm looking for that 462.5. It did a quick bounce right there, and I get out right here, and I sold my call right here for 802 right there. And from a technical point of view, what ended up actually happening is that this turned out to be another zigzag right here at this point, and it stopped exactly in my 61.8 right there. So this whole big one, you can throw that off there, from here as the A wave, and then down here is the B wave. This right here was not the end of the C wave. The C wave was actually another zigzag itself. So it looks like something like this pattern, and then we had something like this right there. So this right here was A. This right here was B. And this right here was C. Right there. But you can see with your eyes that this is a zigzag right here as we go up, down, and then up. And that the finish of this right there was 462.5, and that's where I ended up getting. Now at this point I did end up selling my call and buying a put right here as well, just in case something happened. And it did end up going back down a little bit, starting right there, and we had another zigzag right there through to completion right here. The low right here was missed it by about 1/10 of a point or so, and then started consolidating a little bit right here. Decides to break down right there. And at this point, what I'm looking at is this right here. And so the target was actually hit right here. I got out right there on the way down. A little too early. As you can see what happened. That was quite a trip down. Bought the 460 puts. Bottom where I sold my call at 220. Sold them right here for 305 for about 40%. Had I sold them down here and waited a little bit, $4, would have made 100% profit. But because I didn't say it on the video yesterday, I'm not going to count it because I didn't accurately describe it yesterday. So all we're going to do is describe the call that we made right there. And then as we go along, ends up going down a little bit further, comes back up, and that's our trade. And what I'm trying to describe, I know that this one took a lot longer than usual, but the reason I'm going through that is because there were a lot of places right here that you could have stopped. And let me bring up a clean minute chart to show what I'm talking about. Let's go back slow, very beginning, and right there. And here's a place where you could freak out and get out right there. Right. So I'm just going to draw a lot of these places where a lot of people could get out at some point. Here's another one right here. And you see this, a lot of people are going to freak out and say, oh my God, this thing's just going to give away back all the good profits that I make. I never make profits anymore. And now it just moved down, and I'm going to give it out away, and puh. And now we're gone. Just hold on. All right. Here's another place right here that could freak some people out. Right there. And then right there. And keep in mind that we got out up here. Right there. I'm going to mark that one a little better. Right there is where we got out. And then right there. And so forth. And you get the idea. So I'm walking you through the logical progression that's going on as I'm going through this. I'm not really looking at the price of the option as this thing's going up. You're going to see the price when you sell the darn thing. But at this point right here was a double right there. Once it crossed 460 right here, that was the double. And if you're just staring at the price of the option saying, oh my God, I just got a double without knowing what is technically going on within the chart, then you're going to give back a lot of profit that you should have kept. And you're going to be kicking yourself when you see the thing start going back up. And you left a lot on the table. And I don't want you to leave here without getting the absolute max reward that you possibly can on one of these trades. Back to the original minute chart. You buy something for 320, you sell for 802, 151% profit. Right there. So that was our day today, and we got a positive one on Amazon, an even better one on Netflix. So those were our only entered trades of the day that I spoke about on yesterday's video. Oh, and one quick thing before I move on to tomorrow's trade. What if this had gone the wrong way? And instead of going up, it decided to go down. Now, I don't know what the price of that option would have been because it's hard for me to extrapolate based on what's going on. But what I can do is I can look at the price of what the options are trading at right now as of 4 o'clock on Wednesday afternoon that it is today, and look at the difference between those strike prices from what would in essence be a 457 call up here, and if you go 5 points below, that would be, look at the price of the 462.5 call, because it would be 5 points further from the strike. And if I look at that price, that would have been about a 50% loss had it gone the wrong way, just based on those prices. But it's hard to say that because at the very beginning of the day, you can see volatility goes way up, and when volatility goes up, price of the option goes up, no matter which direction you're in. So if the volatility goes up, even if the price goes down, that decrease in price isn't going to be as dramatic as it would be, say, at the end of the day when volatility is non-existent. Tomorrow, my pick is going to be on Amazon, and this one's not going to be an honorable mention tomorrow. This one is going to be one we're going to trade. The only thing that worries me outside of the technicals is the fact that we have a retail sales number tomorrow, and Amazon is the largest online retailer in the country. And if the retail sales number is really, really bad, that could throw out the technicals completely for a loop. And it does matter, and people do trade off of it, because there was one day back here. It was either November or December where the retail sales number beat expectations wildly and Amazon just took off. And it's happened before and it could happen again, and that's going to be something I'm going to be watching very closely tomorrow morning, and that may affect my trade. But for now, we're going to get in, and what we're going to look at is that same triangle pattern that we saw right here, right there, ever since the cross of the support channel right here. That means a new pattern, and it's going to be one of two things. The consolidation is either going to be these 4 days from right there to right there, where it's the 5th to the 10th, or it's going to be just the 9th and the 10th. And the reason that I'm watching that is because if the triangle pattern is just the 9th and the 10th, we've already completed it today, because the extension was 100% of this right there. And I know it's a bit hard to see, but there it is. You can see the high today met the midway point between 2 days ago's trading range. But if it's the last 4 days, then we have a bit more to go, up to 380 at least. There were a couple others that I wanted to trade, but they had earnings coming up pretty soon, so the volatility was rushed. But this is the best one that I've found that had the lowest risk. And what I'm looking at is this particular pattern right here. Here's my support channel right there that I'm going to be looking at, and that's where I'm going to take my stop loss right here. That number is 371.5. That's a bit too much for an expectation of something to go up to 380. So what I'm going to look for is a move down first before I go in for the kill shot and to go up on this. And so if it takes off immediately, I'm probably not getting in. But my target's going to be up here in this like 380, 385 range or so. My stop's going to be right here at 371.5, and I'm going to look to go in after a slight move down at the beginning. Once that happens, I'm going up with a stop right there. All right, and that'll be my trade for tomorrow. Good luck, everyone.